When we were younger, me and my sister were always told that nothing in life is free. So it was pretty surprising when the first time we set foot into a Costco, we saw at the end of every aisle there were free samples. I mean, as confusing as it was to us back then, looking back on it now, we see behind those free samples exists a corporation that not only wants to empower itself, but also its customers. Hey, judges, my name's Parham Ibrahimi,
And I'm Parnian Ebrahimi.
and we're from Obra D. Tompkins High School in Houston, Texas, and we're here today to pitch to you Costco Wholesale. So, we want to begin by looking at Costco's background and their general implementation. So, Costco was founded in 1983 by Jim Singal and Jeffrey Brotman in Seattle, in which they brought the company up to be the third largest retailer in the world with over 890 warehouses spread across 41 countries. In the last 5 years, Costco has also had some major acquisitions, starting with Innovel Solutions in 2020, in which they acquired Innovel for $1 billion to help them with logistics and technological advancements in transporting heavy duty goods. Additionally, Costco also bought back the 45% minority stake they had lost in a joint venture deal when expanding their operations internationally to Taiwan. As for their products, Costco offers a unique Kirkland brand which provides good quality at low pricing, their membership to warehouses, and my personal favorite, the food court. And much like their double chunk chocolate chip cookie, Costco's growth and success has been nothing short of sweet. In their consumer defensive sector, Costco has an enterprise value of $422.77 billion and a ROE of almost 33%. Across their 52-week range, the Costco stock sits at $697 to $1,078, and the stock price sits at a price of $930.26 as of March 26th. Thus, we propose a buy, setting a recommendation of $956.68.
All right, so let's get into what makes Costco a brilliant investment idea. Consumers not only go to Costco for new experiences in shopping and retail, but Costco is also able to sell bulk products of recognizable brands for low prices. One of the ways that they do this is through their own personal private brand, Kirkland. They use Kirkland as a negotiation tool to make other brands in their stores have a lower markup. So that's why Costco's markup is maximum at 14%, whereas other retailers have it for 24 to 30%. Costco stock is also considered an all-weather stock. During the 2008 financial crisis, for example, the S&P 500 actually dropped by 38.5%. Costco only dropped 16%. Walmart, however, actually gained 20%, and this is because investors considered it a inflation recession-proof stock. But with Costco, they weren't really sure about how it would do given such a bad turmoil. Costco, however, as you can see in this chart, had far greater returns and bounced back way better, and had larger returns over the next few years compared to Walmart, which was stable during that financial crisis. In the 2018-2019 U.S.-China trade war, the S&P 500 actually grew by 20% and Walmart grew by 26%. Costco, however, since they manufacture most of their products domestically, grew by 50% because they weren't relying on outsourcing their manufacturing to China, unlike Walmart, which actually uses China to produce 60% of their products. During COVID, as of March 2020, Costco's price dropped by 13.5%, and they actually rebounded only a couple months later in July and continued their growth. One of the other really interesting aspects of Costco and one of the rarities that Costco has is their ability to create value at a large margin compared to their cost that it takes to create that value. So Costco's spread was around 9.5 and Amazon was 7.7 and Walmart was 8.6. So Costco was not only able to create value, but it was able to do it at a larger margin than these other competitors. This not only shows efficient management, but it shows the continuous ability to create value and for organic growth.
But it's also important we look at Costco's industry analysis. What Costco dominates the best at is their global warehouse industry, in which Costco is the most prominent in terms of market share in the US. You can see in the chart below that Costco is expected to have a 60% majority share in 2025, beating the runner-up of Sam's Club's 34% market share. Then the reason Costco is able to do this so efficiently is because of its utilization of AI in its warehouses. Costco uses AI in order to map foot traffic and how consumers react to product depending on sales, so Costco can determine what products to keep on shelves and also use AI in inventory to make sure Costco isn't over or understocking its products, making sure they have the most amount of efficiency in their warehouses. Costco is also growing its presence on e-commerce and online grocery markets, with them partnering up with brands such as Instacart and Uber in order to expand their horizons and allow for more delivery purposes, expanding the business's growth. Additionally, Costco's also found their private label goods, such as Kirkland, which brings in 30% of the company's yearly revenue by supporting consumers with a plethora of goods that are at high qualities but not high prices, incentivizing consumers to go toward that product in the first place. Costco also provides fuel retail and automotive integration where consumers can buy cars at pre-negotiated prices. And as you can see in the chart below, Costco's private label brand is expected to make up a third of the US's market share in the industry by 2025, showing growth all around. But it's also important we take a look at their competitive positioning and investment risks. Like many other companies, Costco is dependent on its political geography in order to succeed. And while it is stationed in the US that supports it through free trade agreements, that future could be limited because increasing tariffs and trade wars with China that we've seen both in the past and in the status quo could be risky to make an investment in Costco due to potential lower returns. However, Costco is already trying to offset this issue by communicating with manufacturers and having them decrease prices so that consumers don't take price hikes. Additionally, Costco has a good power of industry because they get to choose what products they put on their shelves rather than just putting anything that's offered. While this may seem good, it could be a potential risk due to the fact that Costco chooses to exhibit higher quality products, which means they're spending more, leading to a lower net profit margin. And as we can see on the graph, we see that Costco over the last 5 years has beat the S&P 500 and the S&P Retail Select in terms of general growth and returns. But we can see that further in their financial analysis, where Costco dominates their ROE, ROA, and their debt to equity ratio in their two largest competitors, Walmart and Amazon. However, they do lag behind on their operating margin at a 3.6% in comparison to Walmart's 4.3 and Amazon's 10.7%. The unique reason this happens is because unlike Walmart and Amazon, Costco takes a stance in which they don't have high markups on consumers, meaning that consumers don't have to pay higher prices but build a bond with the company, meaning that they're going to operate on lower operating margins due to a decrease in hiked prices, showing Costco's financial stability right now and for the future.
Let's get into the valuation that we conducted. So the first thing we had to do was find our discount rate, and we had to look for our risk-free rate. We chose the 5-year average US long-term government bond rate because it was the safest and it had with no risk, it had those returns. And for our equity risk premium, we chose the S&P Global because it had moderate returns and moderate risk. Then we got our unlevered beta from Simply Wall Street, and we calculated a discount rate of 6.21%. Then we used this discount rate on the projected cash flow from the Wall Street analysts and summed it up for the forecasted next 10 years of Costco's cash flow, all discounted. Then we had to calculate perpetuity, and after that, we did use that same discount rate to find the present value of that perpetuity and combine that with that 10-year forecast. Then we just divided them by the shares outstanding to give us the $956.68 for each share. This gives us a 2.8% upside.
Now, when we're finally looking at their ESG management, Costco has one of, if not the best board and management of any warehouse company in the United States, with Ron Vacris, their current CEO, enabling to see growth in his term as CEO and also have experience by working in the warehouses himself and working his way up, in which he provides to us the quote, "Culture is not a priority, it's the priority," showing how Costco has incentive to care for its consumers the same way its consumers care for the company. As well as ESG and risk management, we see how Costco has an overall score of 1 in terms of ISS governance, having the lowest governance risk according to the legend. However, their audits do see a rank of 6, their board a rank of 3, their shareholder rights a rank of 1, and their compensation a rate of 5. Overall, making it a balanced company, but there is some concerns in their environmental field. But Costco's already taken steps to mitigate this by providing more terms of green energy and AI implementation to ensure that Costco's practices are sustainable right now and for the future.
Thank you so much.